1. Weekly Forex and Commodities Market Analysis, July 13 to 19, 2025, Gold, Silver, Euro, USD, Indices. 2. Gold Price Update, $3,353 per ounce on July 11, 2025, is it time to invest? 3. Gold, Silver, DEX and Forex, Pairs in Focus, 13 to 19 July 2025. 1. Weekly Forex and Commodities Market Analysis, July 13 to 19, 2025, Gold, Silver, Euro, USD, Indices. Welcome traders. Let's dive into what happened across various global markets last week, July 13 to July 19, 2025, and explore how different assets performed under current economic conditions. As always, let me share my insights based on extensive research and technical analysis. #Gold markets. The gold price started the week showing weakness due to ongoing geopolitical tensions related to tariffs and international disputes. However, towards midweek, prices began stabilizing and showed hints of recovery, a classic case of buy-the-dip behavior often observed in precious metals. When examining long-term trends through detailed charts, it becomes clear that after such strong rallies earlier this year, gold needs time to consolidate its recent gains without losing steam entirely. Right now, we are seeing activity within a broad trading band ranging roughly between $3,200 per ounce near the lower boundary and approaching closer to $3,500 at higher levels, an indication that volatility remains high despite attempts to stabilize. #Silver prices. In contrast to gold, silver experienced notable progress throughout the same period. After struggling consistently beneath critical psychological barriers close to $37.50 per troy ounce for weeks, silver finally broke free late Wednesday evening local times. Breaking beyond this threshold signals renewed confidence among investors who view silver both as inflation hedge material and industrial commodity demand driver moving forward. Shorter timeframe corrections may occur soon, however they are expected merely temporary setbacks rather than full reversals because fundamental factors remain supportive enough post-breakthrough event occurrence. #Measuring potential gains. Using traditional techniques known collectively referred measured move calculations derived directly via prior consolidation zones height measurements combined alongside breakout points themselves yields reasonable estimates suggesting further advances potentially targeting areas nearing approximately $40. Stay tuned closely though. Patience pays dividends particularly whenever dealing highly volatile sectors prone sudden shifts depending upon external influences impacting supply chains globally speaking. #Equity Indices Performance Review, Case Study on Deutsche Börse AG Index, DAX. Germany's flagship stock exchange benchmark, the DAX, took center stage once again thanks largely positive macroeconomic data releases confirming robust growth projections ahead coupled favorable corporate earnings reports issued recently too which fueled investor optimism considerably pushing shares upwards substantially crossing thresholds exceeding €24,500 mark briefly along Friday morning session opening bell ringing loud bells signaling new heights reached. Albeit cautiously maintained afterward reflecting cautiousness prevailing amongst participants regarding sustainability concerns surrounding prolonged expansion phases currently underway. However, subsequent retracement occurred shortly afterwards giving back portions already gained thus reinforcing notion underlying theme revolves primarily around extended periods lateral movement characteristic typical cyclical nature exhibited historically preceding eventual resumption stronger bull runs typically associated successful breakthrough events occurring successfully overcoming established boundaries set beforehand. Therefore, considering present circumstances carefully monitoring developments unfolding daily basis recommended maintaining focus specifically focusing attention onto two distinct regions namely Lower boundary support zone defined around €23,500 level represented strong foundation, likely prevent further declines below such threshold until additional confirmation signals appear. Otherwise b. Upper resistance levels situated near current high points serving purpose actively limit progression beyond those limits unless sufficient momentum generated capable overcoming existing frictional forces present within market structure overall, thus creating balanced environment favorably positioned towards consolidation phase leading up. Next major breakout attempt expected soon enough depending upon external catalyst availability and timing accordingly. 2. Gold price update. $3,353 per ounce on July 11, 2025. Is it time to invest? The shining value of gold, a guide to investing in a turbulent market. The price of gold, a record-breaking rise. As of July 11, 2025, the price of gold stood at a staggering $3,353 per ounce, marking a significant increase of $32 compared to the same time yesterday and a whopping $942 jump from a year prior. This upward trend is a testament to the enduring value of gold as a store of wealth and a hedge against inflation. Why gold remains a popular investment choice? For those seeking an investment that isn't directly linked to inflation fluctuations, gold could be a suitable option. Historically, gold tends to appreciate over time, making it an attractive addition to a diversified portfolio. A gold IRA is one of the most popular ways to buy and hold gold, providing portfolio stability during turbulent markets. It's also a practical solution for investors who prefer not to deal with the logistics of storing physical gold bullion. The controversy: is gold a guaranteed winner? While gold has historically performed well, it's not always a guaranteed winner. In robust economic periods, equities can outperform both in the short and long run. From 1971 through 2024, the stock market's average annual return was 10.7%, while gold's was 7.9% over the same span. However, during periods of economic instability, gold is considered a safer, risk-averse asset. Many investors view it more as a store of value than as an investment like stocks or bonds. A closer look at Augusta Precious Metals. If you're considering investing in gold, it's essential to choose a reputable dealer. Augusta Precious Metals has an impressive track record, with a Better Business Bureau (BBB) consumer rating of 4.95/5+, and a Business Consumer Alliance (BCA) rating of AAA. They also offer a 100% satisfaction guarantee, giving you peace of mind when making your investment. Understanding spot gold and price spread. The spot gold price refers to the immediate purchase or sale price of gold in an over-the-counter transaction. This metric helps investors gauge current demand and market trends. A higher spot gold price signals stronger demand, while a lower price indicates weaker demand. The price spread, on the other hand, is the gap between the price at which an asset can be purchased and the price at which it can be sold. A narrower spread indicates a more liquid market, while a wider spread suggests rising demand for gold. How to invest in gold? If your mind jumps to Scrooge McDuck diving into gold coins when you think of gold investment, that's only partly accurate. While buying physical gold bars, coins, or jewelry is possible, gold is frequently traded via exchange-traded funds, ETFs. James Tasker, a fee-based financial advisor, notes, there is a great debate as to whether paper gold is as useful as the physical. From a financial advisor's viewpoint, it is much easier to rebalance a client's allocation of gold if it is owned as an exchange-traded fund, ETF, and the spread when attempting to buy, sell gold can be quite variable and wide. Common gold investment options. Asterisk gold bars, known as bullion, these are sold by weight, gram or ounce, with purity, weight, and manufacturer details stamped on the bar. Asterisk gold coins, collectibles like the American Gold Eagle often carry a premium over bars of equivalent weight due to their rarity and collectible status. Asterisk gold jewelry. Jewelry's price usually exceeds its gold content value due to design and craftsmanship. Asterisk gold futures contracts. These allow investors to agree on a set price for gold at a future date, enabling speculation without physical delivery. Asterisk gold funds. Mutual funds or ETFs holding gold assets. Like other ETFs, their value fluctuates with the underlying holdings. Is it a good time to invest in gold? Determining whether now is the optimal time to invest in gold is somewhat subjective. However, gold can help diversify portfolios and cushion against market swings. Currently, gold remains a stable asset amid high market volatility. Prices have reached record levels, climbing over 25% since early 2025, driven by persistent inflation and economic uncertainty. Many experts recommend adding gold to diversify holdings. The takeaway: 3. Gold, silver, DEX and Forex, pairs in focus, 13 to 19 July 2025. Forex markets are currently gripped by volatility that could make or break trader portfolios this week. But here's what most analysts won't tell you: the real drama isn't in the currency pairs, it's in precious metals. Gold initially dipped this week, only to stage a remarkable comeback that left traders questioning everything. While tariff war noise continues creating market chaos, the real story lies in gold's tight consolidation between $3,200 and $3,500. This sideways shuffle represents the market working off excess from after explosive gains, a classic cooling-off period that could determine the next major directional move. Over in silver territory, we witness a potentially game-changing development. Prices smashed through the critical $37.50 resistance barrier. Now here's where it gets controversial. Is this silver breakout a genuine momentum shift or just another heat fake in volatile markets? Considering silver's tendency for violent reversals, this development demands closer scrutiny. Meanwhile, other pairs like DEX, Euro to US dollar to Mexican peso, US dollar to Swiss franc, and US dollar to Japanese yen remain under close watch. What's your take? Will gold's consolidation resolve with an upward explosion or a devastating breakdown? And does silver's breakout deserve your trading dollars? Share your bold predictions below.